Joining us right now to talk more about this is Ken Herbert. He is Managing Director and Aerospace and Defense Analyst at Canaccord Genuity. Let's pick up where we just ended this part of this conversation and talk a little bit, Ken, about why this would be a situation if it's been worse than all the optimists had thought at every turn. What do you do at this point? How do you reassess?
Yeah, hi, good morning. So it certainly has, the one thing you need to remember is Boeing, because of how they do their accounting, needs to be coming out with assumptions on when they assume the MAX will return to service. So that's part of the guidance, but clearly that the ball has continued to move to the right. At this point, we're facing a situation where you're going to have probably about 450 aircraft in inventory because Boeing will finish producing currently the aircraft in process now. The impact on suppliers, certainly I think rates at Spirit and other suppliers will step down. I don't think Boeing, in their desire to preserve cash and to divert some of the workforce to the inventory as they look to get those ready for delivery, certainly will step down. So I think the impact will certainly be more than just the risk of 12,000 workers Boeing has at the Renton facility, but it'll certainly be spreading to Wichita and other parts of the country where I'd be very surprised if Boeing kept Wichita at the 52 a month. I think it's a fair assumption that number will step down. It's just to be determined exactly at which level. So, I'm taking a wait-and-see approach on the timing of the return to service. It's important to remember, too, that once you get it here, certainly the international regulators still have to act. And while we assume that,
right,
Europe might be relatively soon after the United States, who knows when the Chinese and other major markets may look to obviously fall in line.
Hey, this is maybe a dumb question. If it's authorized by the FAA, does that mean American airlines based in America can fly them anywhere, or airlines based in America can only fly them in America and overseas it would still have to be approved? You couldn't fly, like United, let's say, couldn't fly one of these jets overseas, or no?
Yeah, so they would only be approved to fly in the United States. But that is, when you look at American, Southwest, and United and their route structure, that is obviously the majority, if not all, of their current use of the MAX. Very
quickly, you've got a $370 price target, a hold on this stock. The stock is trading this morning at $324. $370, that's your price target for the next 12 months?
Yeah, and obviously the stock's been under a lot of pressure recently. I mean, I think it's fair to be cautious right now on the timing of the return to service, on eventually what Boeing might have to do to their portfolio, which is certainly going to be, the next major question we all start to ask as they look at what's next for the MAX and for their narrow-body portfolio once the plane does return to service. So, we're cautioning clients to be certainly cautious on Boeing and the sector right now until we get better visibility on the timing of the return to service and the actual work down of the inventory.